Hey, what's up, everyone? Welcome to Tech Notes. Coming up right now, Tesla stock. We've got why did it sell off aggressively? What to expect for tomorrow? Kathy Woods, why she said that the federal government was wrong in increasing the interest rates by 50 basis points. And why she believes that China, Europe, and US are heading to a recession or are in one right now. So Tesla closed at 784. It's down 9.38%, which is $81.21 down. It broke below our previous support line, which was 850 on Friday. The overall, also ARK Invest went down it's $40.87, down year to date 57.16%, which is $55.44. So it's over 60% down. Tech stocks are off down too. Tesla went down today. Why? Because the shipments who ship to Shanghai, the two people tested positive, so that affected the Shanghai Tesla plant, and we got to see the remnants from it going down. And so that is the reason why that happened today. Another reason, this is all according to Yahoo Finance, is that the Chinese export growth is weakening back to 2020, and it's getting low as lockdowns bite. Chinese demands drop. Korean exports to China fell in April. They're going down to 2020. Volkswagen, we're changing the subject. Volkswagen now is claiming that they're going to be a tight race with Tesla for the e-car crown by 2025. E-car, that's such a stupid name. Car crown. Yes, they're in second place. Yes, they do have the data where they could be almost close to Tesla or ahead of Tesla, but these are just statements. GM is also making a statement. Marubara, CEO, says that they could be the leader by the mid-decade. So they're just statements, just to probably, scare the public. So we'll see how that plays out. But a positive side, Indonesian president is going to meet with Elon Musk discussing nickel and how it can benefit the company of Tesla. That will be something very important to watch out for in the future. But for right now, the overall stock market is down terrible. We broke our support line of 850. Our new support line is $760 on Friday. Yeah, I said that. And the S&P 500, I might have said that, not, but it closed below $400, which is a really bad sign, according to my source. So now we're going to hear from Kathy Woods, but every month she comes out and she talks about monetary policy, economic policy, innovations, and what to expect when you get these reports. So let's hear from her about, this is also about the Feds and why they're wrong with the interest rates.
From many different angles, are below those of the NASDAQ. And as I just mentioned, we do not believe that the NASDAQ, certainly not the NASDAQ 100, includes nearly enough disruptive innovation opportunities as our strategies do. Okay, now we'll go to monetary policy, fiscal policy, economics, market indicators, and a little bit more about innovation. Monetary policy, the Fed raised interest rates 50 basis points this week. And I had been saying that I thought that would be a mistake. The markets are corroborating that it seems that the Fed is making a mistake. So we've seen the stock market go through a spasm. The S&P now from its peak is down 15%. The NASDAQ from its peak is down 25%. Pure play innovation strategies like ours are down 60 to 75%. So that's not just a spasm, that's a convulsion. And you'd think that innovation companies that are not in benchmarks are witnessing the end of their world. It couldn't be further from the truth. This is a huge inefficiency in the market, this tendency to move towards benchmarks in risk-off environments. It's ridiculous that the genomic revolution and blockchain technology and crypto assets are all behaving exactly alike. In fact, crypto assets began to correlate highly with the NASDAQ starting at the beginning of COVID. Before that, there was no correlation at all. And so we think this is an anomaly, a massive anomaly, and that with time it will correct and the efficiencies will be introduced back into the market. So that's the stock market. So we do think that a recession is quite possible here in the United States. A recession is defined as 2 consecutive quarters of declines in GDP. We've had one, and I wouldn't be surprised to see another either in the second quarter or the third. So technically, we would, if we were positive in the second and went negative again in the third, that's not a technical recession. But in my book, it's close enough. Okay, now I know you've been bombarded by headlines about inflation, and we are not ignoring them. Did we expect supply chain issues, the magnitude of what we've seen, or zero COVID policy in China, or Russia's invasion of Ukraine? Absolutely not. Have we been wrong on how quickly inflation would dissipate? Absolutely. For those reasons, we believe. So let's just face the music. PPI inflation up 11.2% year over year. CPI up 8.5%. Personal consumption deflator up 5.2%. And the metric that the Fed pays the most attention to is core PCE deflator, core personal consumption expenditures deflator. So that's excluding food and energy, which they consider to be very volatile and more volatile than the underlying. Core inflation is 5.2%. Now, if you've listened to that, what you're probably thinking is, whoops, input prices are rising faster than output prices. The PPI is rising faster than the CPI and the PCE deflator. What does that mean? That means margin degradation, probably. So disappointing profits for companies that are not controlling their expenses, perhaps by using more automation and increasing productivity. Again, innovation solves problems. This is going to become a big problem. And we think that the adoption of innovative strategies to lower costs and sustain margins is going to become
extremely helpful for us. And so some important economic data coming out next week. Wednesday, we are going to have the inflation data come out, and that will be really interesting because this will be what the feds will need to see in order to gauge how aggressive they're going to be when it comes to interest rates. That data will be released on Wednesday. So any of that, if it's positive or negative, will affect the overall stock market. So expect volatility. And also keep price points to pay attention. If you like these videos, please push the like button, or if you find them helpful, subscribe to the channel. It would really help out, and that'd be super cool. Key price point levels right now, 764. The next support level is 700 to 750. The last days we've been selling off 3 days straight, so we could expect a bounce tomorrow for just the day before Wednesday's data comes out, and it could either go up or down. But it could be a good idea to buy parts of Tesla and average your buy price down until we get to wherever we go, and it goes bing back up. So let me know what your thoughts are about this. I really want to say one thing. I talked about how the stock market and the crypto world could be correlated in so many videos in the previous time, and now I finally have Kathy Woods backing me up. Feels so good to know I wasn't going crazy, guys. I swear to God. So I love you for sticking with me and hanging out. So it's been a pleasure, and I hope you have a good night. Bye.